Good morning, Monday morning here, October 8th. Welcome out to our halftime report. Coach T, Coach Matt, a couple of brothers here talking markets. How you doing this morning, Matt?
Doing fantastic, actually. Looking forward to today's halftime report. Looking forward to the market this week.
Columbus Day, Matt. I'm sure I could have an hour-long conversation about Columbus Day, and I'm not joking. I don't want to dig into the politics, but do you ever talk to your kids about Columbus Day and kind of give them the accurate history of what happened?
You know, it's someone who really does like history, student of history. I was a political science major and a history minor many years ago, Tim. So I do love history and I love talking about history, but I don't think I've sat down and explained to my children the benefits and importance of Columbus Day. I just never have.
I'm going to give you a great book. In fact, Howard Zinn, A People's History of the United States, when I read this book about his take on some of those historical events,
Mhm.
and especially Columbus Day, it changed my life. I became a political science major and a history minor, and I started digging into those, kind of topics much more with a fever about it. I wanted to know everything about it. It's incredible. Columbus Day is not exactly a positive thing. I remember when we were kids, it was. Markets don't even get the day off, Matt. It's not even a
No,
national holiday anymore.
it used to be a little bigger deal. I remember my birthday's on October 13th, Tim, and I always remember Columbus Day because it was like the day before my birthday, always growing up, and it was a much bigger deal growing up than it than it is today. I mean, I when you said it was Columbus Day, I'm like, really? Okay.
Yeah, I think once we learned that he was a murderous rapist,
Oh,
probably not a very good guy.
you want to go down that route?
Short Columbus Day. Short Columbus Day. That's all I'm going to say. If there's one thing to do today, it's short Columbus Day. I know it's a political opinion there. Welcome out, everybody, and let's
Welcome
talk
to the
about
halftime crew, guys.
S&P 500 selling again here, Matt. I was talking to Cody as we were doing some prep this morning. I got to tell you, I'm not concerned yet in terms of a crash or anything like that. But this is the kind of market behavior that can spin out of control. Okay.
Mm-hmm.
I've seen it before. It usually does not. Usually a pullback will rally, but you have to approach this with real seriousness. There's no doubt about it. We're sitting on support in a rotating trend pattern, M-type pattern with some pressure. 3 days in a row, Matt, red candles selling the lows. What's your read?
My read is the market is turning over here, and it's going to be a very interesting, if not very important, next few days for those buyers in the marketplace. Now, when you're talking about major market reversals, I mean, first of all, don't get your financial advice from Twitter. I follow so many people on Twitter, and it's just like, when the market started going down on selling off, on Thursday last week, it's like the end of the world was happening, and the end of the world, and 3 days in a row. Oh my God, the Fed needs to come in and support this market. I mean, it's down 3 days in a row, and it's like, oh man, you guys are so foolish. But I do see short-term volatility coming back in the market here. Major market reversals happen on weekly charts, not on daily charts. Can we agree with that?
I agree. Mm-hmm.
Okay.
Yep.
The markets don't reverse in a day. They reverse over time. But when you're looking at this weakness on the daily chart, the concerning thing to me isn't the fact that the market has came down the last 3 days. The concerning thing to me is the pattern in the market has changed. And when the pattern in the market changes, as a trader, you have to be able to adjust to that new pattern, and you can't just hope that what you were doing that was working is going to work now. You have to be able to pivot and start changing your approach to the market to a certain extent. Tim, when the market felt the breakout here, that short-term trend had changed. When the market broke support level, that short-term trend is confirmed. When the market therefore comes all the way back down in the previous support level, Tim, that's no longer a retracement, a bullish retracement that you're just looking to buy like a robot. You have to be a lot more careful with your risk and with your selections in the marketplace. This to me is the beginning point of what is called a head and shoulders formation, right?
Mm-hmm.
And we were kind of playing around with this during the scouting report meeting we were having on Friday, when Christian and me and you were going through all those things, and we were looking at a couple stocks, and I said, man, that is too deep of a retracement, and that's going to come back in line with what is a head and shoulders formation. And I can't remember who said it, but he's like, man, that looks like Snapchat. The logo of Snapchat. And I said, yeah, that is the Snapchat pattern, right? When you basically have, a left shoulder, the head coming back down into the The support channel back here, then it comes back up into resistance here. So you know, you have some trends changing, you have some patterns changing, and you got to give the market a little bit of room to breathe, to set up next. I don't think you have to go out there aggressive in the market this week on the buy or on the sell side until we see some patterns start to really be confirmed in the marketplace. And whether this turns into a bullish trend or a bearish trend, I don't think anybody knows at this point. It's a short-term trend.
Yeah, and
Matt, it sounds like we're losing your audio.
yeah, just right there at the end, we did lose your audio for a bit, but I agree with it. And the Snapchat pattern, by the way, how do you not remember who said that? That was my recognition. I will have to take credit for the Snapchat first idea, but then you put that out there on Twitter. Are we doing some kind of disservice to Snapchat by not putting it on Snapchat? If we're going to, I mean, if we're going to start talking about Snapchat.
I said it's a Snapchat pattern because it's a selling pattern. It's a bearish pattern. And the reason we called it a Snapchat pattern was because there is no buy signal on the company called Snapchat ever, like literally ever. And so it's a bearish pattern in every capacity.
I like it. Interesting on this market here. You know, the one thing about it is, Matt, you can feel the moving averages rolling. There are little subtle things that every trader will pick up on. You see the red line, which is the 20-period moving average rolling over. They are compressing now together. We're sitting on some pretty important support here, though. Where do you have support and resistance for the S&P?
It's got to be right on that 50-day moving average. You're sitting right at the previous pivot here at 2870 by 2880. You're looking at that 50-day moving average right there at the 2880 mark. I know it's 6 points under that, but it's right in that zone. That 50-day moving average has to be where you kind of look at that support zone in conjunction with the old support zone over here that happened in early September. So that's kind of that support zone I'm looking at here. Tim, I got to be perfectly honest with you. Nothing would shock me in the market this week. If traders are coming into this week with a strong bias one way or the other, I think that's a mistake. I think this is a volatile moment that could really kind of rock one way or the other pretty aggressively.
Yeah, I agree with that. I'm seeing some of the companies that I trade that are absolutely just getting destroyed here today. And we'll talk about a few of the companies out there. Bearish charts that had been bearish seem to be at low points, ready to snap back and rally. And some of the better performers tend to be rotating out, like the Salesforce and the Squares and whatnot. Let's move on to the NASDAQ. I do want to talk tech here next. I know we've been going to the Dow in the past, but to me, the technology sector has to be discussed. So top heavy, breaking support well below the 50-period moving average. Weakness here, Matt. That's 3 strong red candles on higher volume. Now, what's different about this range than the sell-off in late August, early September?
Both of them hit the 50-day moving average. I mean, and it held. That's the only difference here. Well, you have a couple subtle differences. Number one, the resistance level at channel held that came back down into that support level, confirming that M formation. It breaks that M formation and it continues to sell off. That's why that 50-day moving average in the S&P is so important, because what you're seeing in the NASDAQ is what happens when patterns in markets rotate and when they change. And so when you're looking at the market here, market never broke support, market never broke support, market never broke support, market breaks support. That's the difference. And if you're just sitting on those tech stocks and you're saying, oh, they're going to bounce right back, they're not. The most likely scenario here, Tim, is continued downwards.
Yeah, probably more profit taking, more pressure, and then it will find another place to test. I mean, that's what technicals and markets do, right? Once the one layer and one line in the sand is broken, it's almost like an inevitable, and it's group consciousness. We're all looking at it saying, okay, well, that's got to go down to the 200 at some point. Now, within that overall volatility, though, Matt, it could drop and rally on any given day. You know, that's the market as well. So I'm expecting some back and forth this week. Doesn't have a lot of news in it, Matt. And when you have a light news week planned, where the only thing really on the docket are Fed testimonies and some inflation data, there's not big earnings till Friday. There's no tech earnings until next week or even the end of next week. Does a lack of news even concern you more or less?
In the sell-off right now, it concerns me more.
Yeah,
I mean, you'll be much more prone to those international price movements that's been impacting the market. You'll be much more prone to the European markets impacting the stock market. You'll be much more prone to China and geopolitical tensions to impact the U.S. stock market. I mean, the only, I don't want to say the only thing, because that's a miscategorization here, but one of the things that have been keeping this market up, but you know, you're really kind of talking about two things here. Number one, the U.S. economic reports have been very strong for year to date. I mean, they have been really good, beat after beat after beat after beat. And U.S. earnings have been beat after beat after beat after beat, especially when you're looking at the second quarter earnings. And so when you're talking about, you know, these international markets and the pain that the international markets have been feeling, and now it's kind of, you know, sliding into the U.S., you know, price action here, and you have nothing on the docket to really stop that bleeding. That means that the international market certainly could play a little bigger role this week than if we were looking at, say, you know, a lot of industrial news or FOMC news or something along those lines. But I see this as rotating, and I think it's going to continue for the short term.
Yeah, technology stocks obviously under some pressure here today. We'll break down a few of the individual ones in a few minutes. Let's move on to the Dow and talk industrials and large cap blue chip companies, Matt. Still relatively a very stronger chart, but also some weakness like in the S&P. You're breaking below a pivot. You're below a 20, but not the 50 period moving average. This is more of a retracement zone, Matt, although with slowing momentum. I think out of the charts
Tim,
we looked at,
if I'm
better.
a buyer and the only thing I know how to do is buy, I hate everything in the market right now.
This retracement still does not.
I don't trust this retracement. I didn't trust the Russell 3 weeks ago. I didn't trust the NASDAQ last week. On Thursday of last week, I literally said I was carrying a bearish delta, and I basically I basically closed down all bullish swing trades. I didn't put a lot of bearish swing trades on either, mind you. I only have a couple bearish swing trades going on. But, you know, I want to let this market kind of subside to a certain extent. I think it's it's more of a stock picker's market than it has been in the last couple months. There's going to be some very, very good opportunities on the bull side, and there's going to be some great opportunities on the bear side. But if you're looking at every single one of these indexes, Tim, you're looking at the S&P 500 right here. Everything I'm reading is bearish reversal pattern on the S&P. When you're looking at the NASDAQ here, the NASDAQ is getting absolutely crushed. The most likely scenario is we're going to go back down to the 200-day moving average, very similar to what we saw in February and in April here. When you're looking at the YM here, I mean, can I try to get excited about a retracement off slowing momentum that's, you know, breaking short-term support levels? It looks better than the other indexes right now, but that's I mean, if the other indexes continue to go down, if the Russell 2000 continues to go down as it's doing right now at the 200-day moving average, if the NASDAQ goes down to the 200-day moving average, if the S&P continues to go down, there's nothing to buy there in that Dow Jones Industrial Index either. I think we're going to have a little bit this especially, you know, with the Russell, you're seeing how quickly things can get down. I mean, when the Russell broke that support level of 1700, Tim, it only took a good week and a half, 2 weeks to get down to that 200-day moving average. When you're looking at if you're looking at the Russell as a precursor to what's happening in the NASDAQ here, a lot of times those two indexes do move with one another. And you're talking, okay, you're what? 3, 4, 5 days away from going down to the 200-day moving average if this sell-off continues. So there's so much uncertainty in this market right now. And I know the halftime crew wants me to come in here and they want me to say, listen, this is a buy signal, or this is a sell signal, or, you know, this is a great setup. There's no great setup right now. You have to let the market play out. And I think if you're a short-term trader, you take smaller position size. You be a lot more careful with your setup and your strategy selection. You be much more conservative with that strategy. Instead of long calls, you're doing spreads. Instead of delta spreads, you might be doing theta spreads. You know, with the increase in volatility, that's a benefit to theta systems, right? Covered calls, naked puts, credit spreads, iron condors. All of that jazz is really, really good. Mind you, with that said, I'm looking to enter into a bull put spread on the Russell 2000 since it's sitting at the 200-day moving average. But I think it's this week in the market is a week that we get very cautious, very conservative with our selections and with our strategy strategies.
I agree with that. You have to execute based on your edge and discipline. A delta edge, when you're reading a chart, Matt, you got to have clear triggers. There's no bullish clear triggers. I mean, you can try to paint a great picture about where potentially certain areas of the market are going to go back up, but I mean, that's less. I got to tell you, I'm looking at my bull list. It is smaller than my bear and neutral list. There's no question about it.
Oh, in the scatter report meeting, Tim, from Friday, it was easier to find bearish picks than it was bullish picks.
Yeah, I do like a few energy stocks. I do like crude oil. I do like healthcare specifically on the bull side. But other than that, I mean, there's a lot of bearish stuff going on.
And I think it's important, and we're going to look at we're going to look at crude and gold and silver, and we're going to look at those here in just one second as well. But I think it's important to look at those sectors today to see which sectors are showing the pain and which sectors are showing the rotation coming into it.
Yeah, we're going to break down sectors here in a bit. And by the way, welcome Halftime Crew. Obviously, always great to have you guys here, popping in on a Monday morning, trying to understand the markets and move yourself forward. Always great to see you guys. Matt, the Russell 2000 here on the 200 period moving average, it is at some key locations. And you're talking about weekly charts. Kick this one back to a weekly, because I think this one, some larger context might help here. Look at the old resistance, new support, And I'm not saying it's a buy signal. It's not. You could do a 10 delta out of the money spread or something like that. But on this sell-off, this zone of 1600 is key for long-term investment.
I think it's the most important zone in the market right now.
Yeah,
I truly do believe that. If the Russell breaks that 200-day moving average, it could bring down those rest of the markets into their 200-day moving averages. So I think it's something that we all have to keep an eye on, like an eagle, over the course of this week. On Friday, it tested 1620 right here, right where that 200-day moving average is. Had a nice little pickup, Tim, and the one thing that has been working from a day trading perspective is those intraday charts, Tim. If I drop this down into, say, a 15-minute chart here, I'll just kind of show you some of the price movements. You see these quick price movements down at the very beginning of the day, and then you have a little bit of a rally coming into the late day. You have a big down day coming in, and then you have a little bit of a rally coming in. Now look at today's happening. Today, here's the stock market open right here, a little bit of a big downward movement, and then it starts to kind of fade here, and it's showing support right at that 200-day moving average, Tim. From a day trading perspective, buying, what I did on Friday and what I did on Thursday was basically when the market slowed down, you go to the futures market and you buy, the Russell 2000 or the S&P or the Dow, whatever it is, and you just ride that short-term price movement back up. That's the only thing you can really kind of look here, but from a day trading perspective. But if you're looking at it from a swing trading or from an investor or from a position trader perspective, that 200-day moving average is so very important to the market here in the Russell 2000. And I'm not going to give a prediction one way or the other which one it's going to do, because anybody's guess is literally it's a guess. We got to wait and see what happens and see how the market responds off that 200-day moving average. But that's trench warfare for me, Tim. See, you asked me if I'd ever taught my kids about Columbus, Christopher Columbus, and Columbus Day and all that jazz. The answer is no, but I have taught them about trench warfare in World War I. This is trench warfare going on right now in the Russell 2000. You have the buyers on one side, you got the sellers, you got the bulls, you got the bears, you got demand, you got supply. However you want to personally categorize it, those buyers are going to fight for that 200-day moving average, and the bears are going to fight to get it under it. And I don't want to join that fight yet. My money doesn't move the market. Let's let the institutions fight. Let's let the hedge funds fight. Let's let the central bank fight. And then once we see who wins that fight, let's join the winner.
Jumping in is like jumping into that MMA fight on Saturday night right now.
You don't want to do that either.
You
don't want to do that either.
You don't want to try to break this market up.
I tell you, I'm gonna start watching the MMA after that. That was high drama. I loved it.
I didn't see the contest, but
no, I didn't either. I just saw the Twitter response and I don't even know what the Russian kid's name is, but he obviously won the fight and then jumped out of the ring and started causing all sorts of mayhem. I like I said, I didn't see it live, but I did see it on replay, and it reminded me of Ron Artest many years ago. Jumping into the stands to go fight those two dudes. You remember that one when he was with Ron Artest, when he was with the Pacers? I can't remember what they called it.
The melee in something, I can't remember, but it was in Detroit. I was watching it live. I'll never forget that in my life.
Yeah.
Watching Ron go into the stands, the dude having the beer cup in his hand and just like pure terror on his face.
Yeah. I think I saw that same look on Drake's face from the fight on Saturday. That exact same, like, oh my God, I'm gonna die look, right? But no, that's what's going on right now in the Russell 2000. You got a fight going. Let that fight play out. We're not Conor McGregor. We're not fighting in there. Let's let the big boys fight. Let's let Goldman Sachs fight. Let's let Fidelity fight. Let's let Wells Fargo fight. Let's let Citadel and those hedge funds fight. Let's see who wins that fight. I've always said, guys, we're a sniper on top of the hill, and we're waiting to see who's going to win the fight, and then we're going to join the winner. This is not a day you pick a side. You let it play out.
Yeah, hedge, balance, focus on theta and vega, leave the delta trading until we get clarity on where the market's going. Let's move on through the commodities here, Matt. Let's talk about crude oil. We've been focused on this major commodity for a long time. It's the number one commodity in the world that is traded in terms of market cap size and importance, in my opinion. Pullback retracement here, it is one of the areas in the market that you could start to get excited about for the pullback because we've been waiting on it. Is it there yet? Is it set up yet? What's your read?
It's not there for me. It's not there for me. I certainly could understand somebody buying above today's high. No doubt about that. You do have a major support level right here at $74. And so when you're looking at that retracement coming into $74, the candles are getting a little narrower. Obviously, the market is picking up intraday. That's why you have a bottom wick over here and no upper wick over there. But to me, the best retracement, and I said it last week, I'll say it today, the best retracement is down to $72. I'm waiting for that. So no, it's not for me. This is not a Goldilocks retracement. Now, remember, guys, what is a Goldilocks retracement? We've talked about this for weeks and weeks and weeks and weeks. If you're looking at that Goldilocks retracement here, Tim, I'm going to pull up that Fibonacci because that helps us understand where the Goldilocks comes into. It's kissing a 38.2%. That is a legit retracement. There's no doubt about that. But the Goldilocks is down into the 20-period moving average plus the 38 to 50% retracement. That's what we call the Goldilocks. And so it's not in that Goldilocks setup. So it's not a perfect retracement like that textbook retracement we like, but it is a legit retracement. For me, I'd want to see that come down a little bit more, but I could certainly see somebody buying above the day's high. You don't want to buy in that range, but if it does confirm and gets up above today's high, that would be a fairly aggressive buy signal.
Crude oil pulling back. You know, I did see that there was some chatter about Iran and that they might be giving them some kind of, tokens or coupons or whatever it is to let them actually push oil out in the market. Who knows what's happening with that?
Do you have an opinion on Venezuela's crude-backed crypto?
I've been hearing about this for years. Was there more clarity over the weekend I didn't know about?
Oh, they were talking about they're finally getting ready to release a crude-backed crypto out of Venezuela. I don't care in one iota.
I think it's a fascinating idea, though, is to put the cryptocurrency behind a commodity and actually tie it into something. It could become.
If Saudi Arabia does it, it's a big deal. Venezuela, who should be one of the richest countries in the world because they have tremendous oil reserves, but they're one of the poorest countries in the world right now because of monetary policy. So and socialist regimes. So no, I don't care about it.
Not there yet. Crude oil on a pullback. I don't know. A pivot trigger could happen, but I would like a deeper retracement. That Goldilocks retracements, like you talked about.
I do think this week we'll get a really good buy signal on crude.
I agree with that. Gold is next, Matt. The shiny metal. I like 1190 here. I don't like the red candle. It's not a buy signal, but we've watched this thing, and Matt, for 2 months now. Whenever it comes down here, it goes back up. Now, you don't buy on a red candle. You don't try to catch a falling knife. It's not an entry point, but the action here in the 1180, 1190 zone, I'm going to be fascinated with. It's down today. It's on a large red candle. The volume by the end of the day will be a high volume candlestick as well. On a day of risk, why in the world is gold selling, Matt? We're down 4 days in a row in the stock market. Gold is down.
It makes no sense.
It makes no damn sense. Is it just the treasury yields and money is going into interest bearing payments and gold is now being positioned as an alternative to interest, or what is going on?
It has to be. It has to be, 2-year, 10-year yields paying out at 3%, say, money flowing into safe havens. Gold has lost its safe haven status. It has. Whether or not gold supporters like myself and yourself and others agree with it or disagree with it or get upset about it or just throw our hands up and say, what the hell is going on here? But it doesn't matter. From 2017 till today, gold has not behaved the same way it should behave when the dollar goes down or when there's risk in the marketplace. We just haven't seen it. And so there will be a day when the gold comes back and it's like, hey guys, remember me for 6,000 years. Remember me from King Tut. You remember me from ancient Rome and Greece and Byzantine and China. And you remember me when we backed all your fake ass currencies. You remember me. I'm gold. There's going to be that moment in gold in our future, and I do believe it's in our near future. But that day is not right now, and it's certainly not today. And it is a little confusing to see what is happening and it's not just gold, Jim. It's interesting and fascinating to see what's happening with the dollar relative to all these commodities. Since the 1970s, you've had this inverted relationship with the dollar against the rest of the commodities ever since we became this since we became a fiat currency reserve currency in the 1970s. So ever since then, you've seen gold, silver, oil, they all kind of perform inverted in relationship to the dollar. But that's not the case. We haven't seen that in years in crude oil now, Tim, and we haven't seen it in gold since really pre-2011, and that was before they raised margin requirements in the Chicago Mercantile Exchange multiple different times from August through October in 2011. So ever since 2011, gold's kind of lost that safe haven status.
Speaking of the dollar, that has been the safe haven of the entire world. People have been pumping money into the dollar for a long time.
I think it's absolutely crazy that historically, I think 50 years from now, 100 years from now, whatever it is, okay, historically, we will look back at this moment and be like, how in the world did a piece of paper, a something that is literally just created out of thin air, become a safe haven?
Well, I don't know. How in the world did Facebook become your community? It's a weird world we live in, dude. Digital currency and
even with Facebook, Tim, we see those things change. It wasn't Facebook all the time. It was MySpace before then it was Facebook, then it's Twitter. I mean, things change all the time.
I agree with that. The dollar is now up. I've been talking about it fundamentally for a long time. From a long-term perspective, I'm a bear on almost all fiat currencies. From a short-term perspective, it's had some strength. I'm still neutral on the short-term technicals here, Matt. You have expanding volatility ranges. You have support and resistance, and we're right stuck in the middle of this range. I know that the Forex markets are something you start at the top with almost every single day. This dollar rally, does it hit its head here?
I think so.
Yeah.
But Tim, I've been studying currency markets for a very long time. I don't know where this is going. This trend is ridiculous. There's no consistency outside of $94. I mean, at 94 you buy. That's about it right now. It's a little overextended on the short term. Expect a little bit of a pullback. Watch that 20-day moving average act as support over the next week or so. I think you got a slight bullish bias on the dollar here. In the Forex report, we gave it a neutral rating for a reason. We thought it would pull back, but I think the bias is overall bullish right now. It's just overextended, needs to pull back a little.
Give me the biggest crosspair in the world, euro dollar. I want to take a peek at that one. The dollar at a high point, obviously that's going to be putting pressure on the euro. The euro's been down against this. More news out of Italy over the weekend, and obviously politicians are going to continue to chatter back and forth before you get clarity. The euro dollar. Could you? I mean, if you're not bullish on the dollar, you would think the euro would go up, but I don't like the euro either.
Can't touch the euro.
Yeah.
No, you can trade the yen, you can trade the pound, you can trade the Aussie, you can trade the New Zealand dollar, you can trade the CAD, you can trade them all. You cannot trade the euro right now.
Dollar yen, though, there's the third largest currency in the world. I think the yen's a trash currency as well. I mean, I have no confidence in buying the yen because that would be shorting.
But I will be buying the dollar against the yen in the short term. Okay. You're looking at it, I did the Forex report 2 weeks ago. Keith King did it this week. Both of us are extremely bearish on the yen. And we talked Friday night, kind of giving both of our analysis on the currency report. Both of us were expecting a little bit of a pullback on the dollar against the yen, coming back down into support levels. You're seeing that. The knife is falling here. Wait for it to slow down. I think we're going to have a really good opportunity on the dollar yen cross pair later on this week.
Let's look internationally at some of the other markets as well. EWZ, there was an election in Brazil, and I just saw Christian Sisson's name, one of our coaches over at Tackle Trading, made me think of this. The Brazilian market likes it. I know it was a preliminary election. I don't know exactly what their parliamentary procedure is or when they actually put that guy in, if they do or don't. But it sounded like one of the, and I have to get his name, Christian, if you know his name.
Christian, do the Brazilians like any politician? So when we say the Brazilians like it, the markets like it, not the people, right? Not the people. I don't think the Brazilians have trusted any politician in at least 40, 50 years.
Yeah. And obviously, and I can't wait to talk to Christian about this in our team meeting later.
Listen, Christian labeled Brazil the serial killers of currency. That's what he labeled them in the newsletter. It was great.
Well, it's gapping up here. Is there anything that would get you interested in South American equity markets? No. Not right now. Even, it's a tough one. No. It is breaking out. It's up 5% today. So you have to respect the strength.
So I get that. But so here's what we're trying to sell. Short-term volatility in the market. Let's go to the safety of Brazil.
Is
that what we're doing?
No, I don't have any position or opinion.
Yeah, I think you got to let the equity markets cool down over the next couple of days. And no, I am not looking to Brazil to go offset my risk in my portfolio in the U.S.
In the international markets. What about China, FXI? We were talking about China for the last 6-8 months, obviously on a daily basis, and the Chinese market is now on support in a downtrend. I got to tell you, if you're in puts, you're profit taking, which we've been talking about Baba and Baidu and many of these different companies. Is there any potential rotation back into Chinese stocks here, Matt, from the bottom up?
I'm not touching China.
Yeah. I'm with you.
$40 is support level. China's so weak economically right now. Their markets are extremely weak. Their stocks are extremely weak right now. I think the most likely scenario is, you eventually break 40 and the Chinese markets continue to sell off. The U.S. has a tremendous amount of ammunition in this trade war, and I fully expect this trade war to get worse.
Let's go through each of the sectors. I want to talk a little bit about relative strength and weakness in some of the areas I'm seeing here on a Monday morning. We can do it right here in Thinkorswim, you bet. And let's start with, and we can look at all of them rapid fire style, but really my bullish ones, Matt, are energy and healthcare. Give me a quick read on all the charts, and let's talk about a couple of these different areas. Energy, the reason I like it is because crude oil, the pattern in the energy markets, and not just crude, by the way. Gasoline has performed better lately, heating oil, natural gas has been
Brent crude has been on a tear. I mean, gas has been on a tear, natural gas has been on a tear, crude oil has been on a tear. Every energy commodity product has been doing really well lately.
I like energy a lot right now. Obviously, that trend has some mixed information in it. You have a resistance at 78, and you got a pullback developing. Are you with me on energy here that is starting to show some strength?
Mm-hmm. I am. Ultimately, you want to see 78 get broken here. But any short-term pullback into 76, that's a buy. That's a buy for me, especially when we're seeing weakness out there in the rest of the market. I am with you on energy. I like the price movement on energy right now, and there's some good stocks. But it's not just the energy sector. I mean, you're seeing the energy sector as a whole. But you nailed it correctly, Tim. It's the energy commodities. It's natural gas. It's crude oil. It's gasoline. It's Brent crude. It's all of them have been performing very, very, very good, showing a little bit of a bump up here in the energy sector as a whole. So yeah, I am with you. I think energy could be a good play this week.
I like it. I think there are individual companies in this area and space that you can target as well. Go check the stock and options report. There's a few of them there from over the weekend. The other one I like, Matt, is healthcare. Healthcare has been my number one sector for a couple months now. In fact, the market's just loving it. The pullback is concerning. Some of the same.
I'm not concerned about this pullback. I am getting excited about this pullback, Jim.
I like it too. Straight red candles. Obviously, you got to respect that. The pressure. I
Yeah.
don't know. It's a perfect.
Let it come into a great support level right here, right at 93. Let it come in between two rising moving averages. Let it slow down, obviously. You know, let's see that doji, let's see that hammer type candle. But no, you're approaching major support levels in a bullish uptrend, in an expanding trend. There are so many stocks in the healthcare sector that have been doing really, really well, and this is an opportunity for in my opinion. I mean, we were looking, there's one stock on the Tackle 25 that both you and I really, really like here in Boston Science. I was getting ready to just, pull the trigger here on Friday if we got that upward movement in price. Obviously, we didn't do it. Boston's coming back down. I'm still looking at that same exact setup here, Tim. I'm waiting for it to slow down. Then I'm going to pull the trigger on Boston. But, healthcare, I'm getting excited for.
I agree. There's a lot of pullbacks in healthcare I like.
And healthcare is not a defensive sector any longer. Healthcare works, and I've said this in the past, Tim. Finance went through its evolution to aggressive in the 80s and 90s. Finance is now aggressive. It used to be very, very conservative. Healthcare was very, very safe, very, very conservative for years and years and years, very similar to utility stocks. But then in the Obama years, you started seeing healthcare go through its evolution to be an aggressive sector. And that's what healthcare is. It performs more like an aggressive sector than it does the defensive sector these days. So when I'm looking at this, I'm looking at that pullback and I'm saying, yeah, let's let it set up. Okay. But there's some great swing trading opportunities in healthcare this week.
I like XLV. I like some of the individual components. The thing about whether it's defensive or aggressive, and we don't have to go down the rabbit hole on this, but that can be tough sometimes. Because when you think about healthcare, biotech is very different than a hospital or a health insurance company, right? I mean, so you have certain kinds of companies that still feel defensive, like United Health, right? But then you've got other companies that feel very aggressive because they're into pharmaceuticals or biotechnology or whatever it is. I agree with you, though. It has felt very aggressive.
Well, you got the same thing in financial, though, right? I mean, you got your aggressive big banks out there, your brokers out there, but then you have your safe havens in insurance companies, right? Yep. So the evolution that's happening in healthcare is obviously biotech, but biotech is one of the most ultra aggressive of all the industries. Wouldn't you agree with that?
Oh, absolutely. And one of the and can be one of the hardest to trade because of the fickle nature of those companies.
I don't trade biotech a lot.
Whatnot. If you're going to trade it, I would either stick to the very biggest companies like Biogen, which is a Tackle 25 stock, or the ETFs that track biotech. Neutral. I'm neutral right now on tech, materials, financials, industrials, and discretionary until I see more weakness. There's such a deep pullback. I'm having a hard time going to like a -1 position, Matt, in the market right now when I still see long-term uptrends and until I see a breakdown of support. Just personal. I've got a neutral bias with with a bearish hedge on is where I'm at. But let me ask you a question on utilities. I want to get your take on this one. Utilities are usually not the sexy sector in the market, where we're getting all fired up about talking about utilities. But man, they're blasting off, Matt. Money is going into this area with the dividend yields or maybe the conservative nature of whatever it might be. Utilities are looking fantastic here. Would you buy a breakout up here at 55?
Well, I don't swing trade utilities. Addition in utilities to offset the rest of some of the other portfolio. Absolutely. Yeah, I mean, utility, every time the market goes down, utilities go up. It's the only sector that performs defensive any longer.
Yeah. Give me a look at real estate. The most bearish sector that I had a call on going into the weekend was real estate. It has a huge green candle here today, but that trend, Matt, is really rotating over. I'm going to maintain a bearish position on real estate until that trend changes.
Well, I think you're going to see the market appreciate back up into resistance here. The 200-day moving average is acting as support. Technically, you're basically just in line for a short-term bounce back up into resistance, followed by a bearish movement after that. But I'm concerned about real estate in general, Tim. I'm concerned about real estate in major markets. And what I mean by that, I mean by people's ability to afford to buy high-end homes, medium homes, and even starting to see some of the lower-end homes. Real estate is turning over, and it's been slowing down for years now. And when you're looking at it here, not on XLRE, but when you're looking at IYR here, And when you're looking at IYR, and let me get a little bit more time frame to show you what I mean by this. Let's just go 15 years. Okay, so here's the 2009 markets. It looks very similar to the rest of the market, right? But then look at over the last 3 years here, Tim. You see nothing of those in the last 3 years, and that's because as prices have been going up, they're getting higher and higher and higher. And then smack dab here in 2015, what did we start doing? Everybody, what did we start doing in 2015? We started raising interest rates one time, followed by more, followed by more. We came off quantitative easing, and then real estate has just been showing weakness ever since then. To me, real estate is going to be the market over the next couple of years, Tim. I don't see this as there is no buy signal for me right now in real estate.
Cody, come on in here for a minute if you would. I know Cody's buying a house out there in Hawaii. He had moved to Hawaii. And, it comes back because, Matt, you and I, we know many, many, many real estate investors. And as a trader, I'm with you. I can play the real estate market through ETFs or products or different things. But when you're buying your primary home, you still got to you got to buy a home for your family, right? You can't really avoid that part of the purchase. So when we're talking about real estate, we're really not talking about people's decision to go out and buy a home for their family or for
I'm talking about in the financial markets.
In the financial markets. That's right. Yeah. Cody, I hear that you are putting a price or an offer in on a home here. Is that right?
Actually, my plan is a little bit more conservative. I plan on renting, seeing what's the markets. I don't want to buy at the top of the market. So
I agree with that.
Plan is to rent for a little while, see what the markets do.
Especially in Hawaii.
Especially in Hawaii, exactly. The dollar doesn't go as far out here in Hawaii as it does in Texas.
No, it does not. And I'm not necessarily I'm not concerned about the Salt Lake housing market. I'm concerned about San Francisco, New York, Chicago, Seattle. LA, Hawaii, Seattle, those big coastal cities. So that's where my concern is. I'm not really concerned about Dallas, Texas, or Salt Lake City, Utah, or, so I'm not concerned about that.
Well, and I will say this, though, buy and hold strategies by most of our real estate investor friends, they've been saying for a long time, buy and hold is not the right approach to the market right now. Real estate has some risk here. There's no question about it from a long-term perspective. And if the Fed continues to raise rates aggressively.
Oh, but for those real estate investors, they do know one thing. They're all looking forward to raising the rents on their tenants because the people such as Cody are making that exact same decisions. They're saying, you know what, I'm not looking to buy here because it's a rising interest rate environment. I don't want to buy after 10 years of price appreciation. So let me just rent right here instead. And the landlord's like, yeah, okay, more demand, higher rent.
I agree. Give me forexfactory.com. Let's look at the economic calendar for the week and kind of plan our week. Not a busy week. There is some inflation data on deck here, Matt. The Fed always talks about the CPI and the PPI. I don't really even dig into those reports, quite frankly. I'm always aware when they're coming out, and I'm just looking for the headline risk. You know what I mean? As a trader, is there anything that you're looking for from the Fed this week? I know Bostic has testimony. Corliss has testimony later in the week. Anything
Nobody
out of the
cares
Fed?
about those two.
Yeah.
They can't say nobody cares about those guys.
It's Jerome Powell, pretty much.
Jerome Powell.
Yeah.
That's the only person we care about hearing from. If William Dudley wants to give us, no, I don't care one iota what William Dudley is going to say. We know what he says. He wants low interest rates. We know what these guys want to talk about. It doesn't matter. It's Jerome Powell, and that's it. That's the only thing we care about. In looking at the economic calendar this week, the only thing I really think we need to really kind of focus on is the CPI report later on Thursday, and then the University of Michigan consumer sentiment on Friday. It will be interesting to see, especially if these consumers start looking at their 401ks over the last couple of weeks, Tim. If they start having a little bit of a different read on their consumer making it rain by everything parade that we've been going on in 2018. Okay, so I am looking to see how if there's any lag there in the consumer sentiment report. But those are the only two I'm really kind of focused on. Obviously, as a trader, I'm looking at the PPI report as well. But for most people that are not professional traders, CPI, consumer sentiment report, those are the two reports I'm looking at.
The one thing to remember, though, about this statement, I think it's an interesting point. When the quarter and the month closed, the last statement they're going to get, the market was at an all-time high. On 10/1, the S&P 500 was up at 293. right? So now anything that happens in October, a lot of the 401k who's not paying attention, they usually come in late and they're like, oh God, what happened, right?
It'll be the November report, but
yep, for sure. All right, let's look at some individual companies here, Matt. There's a bunch of stocks on the Tackle 25 I'm very focused on, interested in. On a day where the market's red, though, I like starting with a bear setup. Johnson Controls, JCI, was one of the most recent picks. We talked about it. I like this developing pivot trigger. What's your read here on JCI?
It's a beautiful bearish trade coming back down into the 200-day moving average, the 20-day moving average. It's confirming on the downside. I think a trigger under 36 is appropriate here for itself. But you got your head and shoulders formation up here. You got your breaking of support, and then you got your kiss of death coming into the 200-day moving average. I mean, what if you're a bearish trader here? That's perfect setup for the downside.
I do like the bear pivot trigger. I also like
stop loss would be above all these moving averages right here.
Yeah, I do like W as well, which is a little bit of an M pattern breakdown, little alternative one. When you go from a bullish sentiment, because I'd been bullish on W, I like the pivots as it was in the uptrend. There were several breakout entry points that you could have traded as a swing trader. But when you break support, you have to respect it, whether that's in the development of a new trend and you play it on the next pivot or something like that, or you just flat play this thing down, Matt. That is an M pattern by definition. Give me a thorough technical read on W.
Oh, it's, I mean, trends continue, patterns continue, they continue to repeat until they don't. Right? And when they don't, that's when a reversal or continuation pattern forms. And so your two standard reversal formations are your M formation, which you're seeing here on Wayfair, or your JCI reversal we saw with the head and shoulders just barely. This is a textbook situation of a bearish, the very beginning point of a bearish downtrend. Okay, so as a short-term trader, this is an easy trigger to the downside, especially with a company like Wayfair that is extremely overvalued right now. And so when you're talking about a stock that's extremely overvalued and you're talking about all this risk coming back into the market and you're talking about a formation, breaking of support, not only did you break the 50-day moving average here, Tim, you broke the channel here on the M formation. You broke previous resistance over here as well. That is an easy call to the side here. Think back and just, when for the halftime crew, you guys will remember this when we were looking at the Russell 2000, when it broke the Russell 2000, look what happened. This is what happens in bearish markets. Bearish markets are extremely faster than bullish markets are because fear is much greater of emotion than greed is. So when you're looking at Wayfair here and you're saying, okay, M formation, breaking of support, the most likely scenario here is what, Tim? What's the most likely scenario?
Probably drop to 110 and then try to test new support, but continued further dropping is.
I would say drop to 110. Yeah. Not a drop immediately to the 200-day moving average, right?
No, 110.
A drop to 110. 110 old support right over here. So if the most logical component is a drop to 110, then what should we do as traders? If the most logical conclusion, everybody, is a drop to 110, what should the trader do? I want to ask the halftime crew. What's the most logical conclusion? Well, what do we do, Tim?
Well, you can play it as a swing trader, right? Short, obviously with a tight stop loss and a trading plan. Because Matt, here's the thing about a trade like this. If it fails on this support break, you know where to get out. Above this candlestick.
Yeah, it's easy, above 30.
Yeah. One thing I love about the setup, because the probability of it going to 110, I think, is there. But one thing I love about the setup is that you also know where to put a tight stop loss, which would be right above the old support point that has broken. And so you don't have that much risk in that regard.
So basically, Tim, what I'm doing here, excuse me, I got a little bit of a cold. Basically, what I'm doing here is I'm pricing out a bear put spread. And so I'm buying a 135 contract with 52 delta. I'm going to sell 28. That gives me a 24 delta. I'm going to sell the 110, which is our target, Tim. That's going to lower my cost. Okay. So I'm buying the 135. I'm selling the 110 to create me a spread. And that lowered my cost by about 45%. Okay, that's right in line with what a bear put spread should be. So we're lowering our cost by about 45%. My target is 110. My stop loss, I'm just going to put it above 130 at 131. Okay, I got a per contract, got a $418 return for a potential $115 risk. So the question is this: if the probability is greater than 50%, right? And I would say the probability right here is greater than 50%. So if the probability is greater than 50% and the reward exceeds the risk, then the trader should logically take the trade. That's what the trader should do. That's a really good trade on Wayfair. I would not buy put options here. I do not think this is a week where you go aggressive with the options market and you buy calls and you buy puts. You either do it in debit spreads or credit spreads. The other way to go about this here, if you didn't want it to directional component, but instead you wanted to do the theta component, is you could come out 39 days out here, come down to a 17 delta right there. It's not exactly the most liquid, but let's see what we can get here. We're getting right about 55 cents on credit. Yeah, I don't know. You get 55 cents on the credit selling a 17 delta, Tim. So I'm going to give you two options. Option one, you do the bear call spread. You get 55 cents, about a 10% return on investment with 83% probability. Option two, you do the bear put spread, and you have a $115 risk for a $400 return with 52% probability.
That's a tough call. I generally don't love bear calls on breakdowns, but I think in this example though, Matt, I look at the ATR distance between 126 and was that the 155 or the 160? It
was the 160 contract.
I mean, my goodness, that is 34 points of cushion. That's a 5 ATR buffer cushion.
Big.
If you put that in the tackle theta spreadsheet, it would tell you where the buffer is. That's a lot of distance. I might lean on the credit there.
Well, mind you, the minimum we're looking for on an ATR buffer zone is 2 ATRs, right? The minimum. Anything less than 2 ATRs, we would never do on a credit spread.
Yep.
But when you're looking at 5 ATRs with 39-day contract on a 10% ROI, and you're selling all this resistance zone, which would be, and mind you, Tim, that would have been an easy trade to manage as well. You do nothing as long as it stays under 150. If it goes up 150, you get out of the spread, right?
Yeah. That's
right. An easy management too. So I think the credit spread, 10% ROI, 83% probability, 5 ATR buffer zone. You're selling above all resistance zones. Option two, you take the directional bear put side of it. I think you can make an argument one way or the other, but I think with what we're seeing in the market, playing it more conservative is the way to go.
Give me Baba for a minute. Me and Cody are going to talk about it. I want you to flip mics and try your Logitech video mic.
Yeah.
Let's try a different one. Yeah. So now Baba is one of the biggest stocks in the market. Now, if you've been out there and you've been a part of our halftime crew, you know that this is one of our most consistent stocks that we bring up and look at for a lot of reasons. It's Chinese tech company, one of the biggest companies in the world. Not only that, it was a beautiful downtrend. Cody, I know you've played this for some time here. If you were in something short on Baba down here at 150 in a bear downtrend, do you take profit on this here?
I'd probably be hedging a little bit, taking some profits off. I actually, on that, I took profits 2 days ago.
Yeah, so you did get out on Thursday, or was it Friday?
It was Thursday. I got out with that big candle right down to that range. It kept jumping down to about 154 and then popping back up. So when it hit that 154, I took profits, and then it still ran on me, but we'll see how much further it goes.
Well, and Matt, one of the reasons I want to bring up Baba is W breaking down off of an M pattern. Baba did that 4 months ago. You trade bearish when you trade bearish. That M pattern broke down in June. We talked about that breakdown. It developed into consolidation, and now the trend has just been bearish for 4 or 5 months. You never know how long that bearish activity is going to sustain after a trend fails.
No, you don't, but you trade the trend and you trade the pattern until it fails, right? And when you're looking at Baba, you can say the same thing on the market that you said on Wayfair or that you said on Baba. You look at this very consistent trend line going down. You trade that trend line until that trend line changes.
Yeah, I agree with that. Guys, there are a few companies that have earnings later in the week. The major thought of the day, in my estimation, is what Matt started with, and that is that you have to trade and respect where we are in this market. And until it shows you upward action, you don't treat it as a buying opportunity. You got to get confirmation, right, Matt?
Yeah, real quick. I just want to mention the mosquito in the room here. If you guys think that buzzing sound was driving you nuts, I couldn't even collect my thoughts. It was screaming in both of my ears. It was driving me nuts. So, yeah.
We're going to throw that Logitech H800 away. That's what's going to happen.
No.
We have to. I know that this
it's
is
just old.
You've had a long respect of the Logitech mic. Listen, get it.
I have 10 of these mics in the other room. All old that they just run their course, and it's just ran its course. Corky has to get retired. That's it.
C'est la vie. You know, one of my rules in life is when something is not worth it anymore, you throw it in the trash.
Yeah.
You know, don't even think about it. All right. I love this, Matt. Are there any stocks that you're focusing on here as you finish out the day? What's your last thought here?
My last thought is I'm working this week off those scouting reports, and I'm not touching anything else.
I like it. You know, the whole purpose of the reports, guys, is to give you watch lists to operate on stock options, futures, and Forex. I want to give a big shout out to Coach Noah. Noah, I really loved the piece you had in the stock report video about risk and reward, you know, and the assumptions that people have about what they want to win and lose. And there was a really interesting diagram. Today, Matt, actually, I think they are announcing the winner of the Nobel Prize of Economics, you know, so I don't know if there's who's going to get it or who's even up, but it does remind me of a book by Michael Lewis about Daniel Kahneman and Amos Tversky, and that's called The Undoing Project. They won the Nobel Prize of Economics about this topic Noah's talking about. Highly recommend that book for sure. I know you and I are podcasting a little bit later, so I'm excited about that. But mostly I'm trying to figure out what's going on with some of my high flyers. You know, Square is getting destroyed today, SQ. This is where some of my concern in the market is, Matt. Some of the better performers where I thought they were great setups and I was looking forward to coming into the week and looking for the pullback. Square's down 11%. That's no joke. That's a Snapchat pattern right there.
This is the Snapchat pattern right here. This is the prototypical. You see the Snapchat right there. The precursor to the head and shoulders. Snapchat's down 3.5% since we started talking to him.
Yeah,
it was down about 7.5% earlier today, getting absolutely slaughtered. You can't touch this company right now.
And then CRM Salesforce, which has been one of both of our favorites for a long time, is getting absolutely destroyed. They had some news, Cody. I think you saw it even as we were getting started. They put some offer in to buy some of the company, I believe.
Yeah, they're buying Rebel. It's a little penny stock, but yeah, they're going to take a hit because of the budget. But if that deal falls through, they'll pop back up. Or once they rebudget out with that in their budget, should come back up. I'm not worried about this down candle today.
And one of our favorite companies we've been looking at for a long time, Tiago asked for a quick take on Lilly, Matt, LLY. They actually, Tiago, this is probably at a profit-taking zone up here after you get that kind of movement in a market that's showing pressure. I know healthcare has been a juggernaut, Matt. I had some positions on Lilly. I took them off actually on Friday last week. So,
inverted hammer here. What do you say? It's overextended, trope, stop loss.
Yeah, for sure. All right, guys, that has been our halftime report.
Mind you, Tim, we kept Lilly on our scouting report for 3 straight weeks because we expected this to happen.
We expected the breakout. I mean, we saw the upward consolidation, a huge upward movement. Healthcare is a juggernaut. It had a compression range up there. The break and run here, Matt, it's already moved.
Well, and I want to ask the halftime crew because I want to get your guys' take on this. This is important for me as we're going into those scouting report meetings. We kept Lilly on the scouting report for 3 straight weeks. And there was the concern was like, well, we had it on last week. But if we still like the setup, do you guys still want to see it on the scouting report? Even if it doesn't trigger that specific week, but if it's still a good trigger, that's my take. If it's still a good trigger, keep it on just because it didn't trigger in that week.
I think if you still expect a trigger and a pivot and a movement or a breakout that week, we're going to probably keep it on there, right?
Yeah,
and that's why we kept Lilly on there for sure.
Yeah, I think you have to. I mean, those scatter reports are trades that we think are going to be setting up that week, right? But if it doesn't trigger, it doesn't mean it's not a good setup still. So I think we keep it on.
Well, and then one last one. I like this late addition here. Rob Dye asked, what about Adobe, guys? Matt, there's another M pattern breaking down. This is the kind of stuff I'm talking about with this pullback in the market. We are seeing consistently strong performing stocks show a lot of weakness.
You're obviously seeing rotation here, and anybody who wants to pick up a large cap tech stock, I'll sell it to you. Mm-hmm. I mean, you got to stay away here.
I agree with that.
And let me say this. It was obvious last week this was happening. That was obvious. I said it on Wednesday. I said it on Thursday. I've said it about the Russell 2000 for 4 straight weeks, Tim. Okay. So if you are not doing your daily routine, right? And if you are not acting like a professional, and if you are using this market as a hobby and you're upset today because you lost money because not every time everything goes up, that is on you. That is on you. We have seen these things rotating, and that's why you come join us in the halftime report every single day, guys. So I appreciate you putting up with my mic today, guys. Thank you for that. I apologize for the mosquito buzzing in your ear.
Well, it was only choppy for about a 5 minute.
No, believe me, I could hear it too. It was driving me nuts. But you tell Gino that I'm going to go buy another mic today.
I definitely will. In fact, let me make that phone call right now.
In fact, I'm willing to bet you're going to enjoy making that phone call. Hey, Matt says he's going to go buy a mic. Does he need a mic? Does Matt care? No.
Hey, listen, I will support you buying whatever mic you can, as long as it doesn't say Logitech on the brand. We need to rotate brands on this sucker. And by the way, if anybody out there is an audio expert and has recommendation on a mic, I would love to hear it.
I got the Yeti Blue. I got the Yeti Pro. I got this little bad boy right here that I can't figure out. You know, it always just works for me, Tim.
Don't do it.
It just feels right.
It just feels right. All right.
Yes, it just feels right.
Hey man, listen,
I have something to do with it. I broke it. Look at that.
Oh,
some duct tape.
Duct tape that thing. That's some real Emory County stuff right there. Throw some duct tape on it. See if it'll
I about did that line from Wedding Crashers. Where's the meatloaf? Bring the duct tape.
You can't fix it with duct tape. You're not using enough duct tape.
By the way, I will say this. If there is any company that I am going to target on this pullback, it will be Boeing. And I still do love that company. And I
agree 100%.
Yeah.
100%.
Beautiful pullback retracement. I know it's a big stock. I know it's a large cap stock, Mac, but this has been a juggernaut. And industrials were an area where I liked it. So I will be watching this one this week.
Hey, Jasmine, real quick. This is a Rode mic. No, it's the NT-USB mic. But it's a really nice mic, but the problem is every time I use it, it automatically switches over to this mic up here, my thing. I'm just not very tech savvy with mics. That's why my USB one works.
Sounds like
I love Adam. If you can't fix it, duck it. If you can't duck it, well, you know the rest. That's right. Electrical wire, Adam. That's the rest. We'll figure it out one way or the other.
C'est la vie, one step at a time. First issue and item is to watch this market the next 2.5 hours as we go into the close. I'm going to be fascinated to see how this market closes, because some of this action, Matt, could have been attributed to over the weekend, pressure from China. Who knows? Markets have a way to make excuses for themselves. But if this thing spins out of control, breaks below support, look out. I'd be hedging like crazy going into tomorrow. We'll see it. All right. Good job, brother.
Yep. Good job by you. Good job by the halftime crew, guys. We'll see you next week. Not next week. Well, I was thinking podcast there for a second.
Yeah.
We'll see you tomorrow, same time, same channel. And make sure you're getting the podcast later on tonight or tomorrow.
C'est la vie.
All right. See you guys.